So, a quick video here for you guys, as I just wanted to talk about SoFi and how they might be getting into a little bit of trouble, or at least some people are trying to get us into some trouble. Sherrod Brown, the chair of the Senate Committee for Banking, Housing, and Urban Affairs, along with three other members of the committee, actually sent in letters to the FDIC, OCC, and the Federal Reserve to try to get SoFi in a little bit of trouble whenever it comes to our cryptocurrency activities. See, there's a problem. Whenever SoFi was given a bank charter back in January of this year, they were told as part of the conditions that they were going to have to start to wind down their crypto activities whenever it comes to them holding cryptocurrencies and also offering their clients to be able to have the activity to buy and sell cryptocurrencies. And at the time that we were actually given this bank charter, they knew that we were giving our clients the access to buy and sell 30 different cryptocurrencies. So the deal was to be given 2 years to wind down SoFi digital assets, along with 3 other years of possible extensions if needed. And that part of winding down is really important because that's also part of the stipulation is that we're not able to actually increase any of the types of products or offerings during this time as we're starting to wind down. Now, this is the main part that's really in question of violation. Because 2 months after we actually announced the bank charter, we started announcing that we were going to be giving out no-fee purchases on cryptocurrencies for direct deposit members. The problem I have here is the timing. That happened 8 months ago, okay? And it's whether or not that's even a new product at all. We're simply offering the same products, just giving a new way for people to actually purchase them. Now, is that a new product? Is that a new offering? That's going to be up to lawmakers to decide. So for 8 months, they had no problem, but only 1 week after the fall of FTX, and now we have a big problem with cryptocurrencies, and great timing on their part, right? Because lawmakers are going to be very on edge. In SoFi's direct reply to these allegations, they even said, "We do not have any direct exposure to FTX, FTT token, or Alameda Research or Genesis." So this is very important because they know that that's going to be part of the argument of how risky these cryptocurrency selections could be. But knowing that those are the real big ones that collapsed, having no ties to any of those companies, in fact, we go with Coinbase and BitGo that have had no withdrawal cancellations or anything along these lines, does actually prove a point that we have done the necessary, research in putting our money into something very safe. Or at least as far as cryptocurrencies can go. Now, there's two other parts to this quote-unquote violation that they think we have, and that's under the capital requirements that we have to have for the actual amount of cryptocurrencies that we're holding, as well as the fact of what they're saying that we might not have regulated tokens under the 30 cryptocurrencies that we're currently offering. I definitely have a problem with that one. I mean, the balance sheet issue, I might not know, okay? We're going to have to actually see the disclosures from SoFi to actually know if that's going to be a real issue. But the 30 cryptocurrencies that we've been offering are the same 30 cryptocurrencies that we offered whenever the bank charter was actually given to us. So they know exactly what the offering was, and yet we absolutely got, conditionally approved for a bank charter. Nothing else has changed since then, and yet somehow these coins are more risky than whenever we first offered them back whenever the price was, much higher. But SoFi is not rolling over and surrendering just yet, okay? What they're actually doing is putting up a very strong defense. They go on to say, "We maintain a consistent, constructive dialogue with each of our regulators. Cryptocurrency remains a non-material component of our business." The reason why they say this is because they don't want to be acting as if they're pushing cryptocurrencies onto clients. They mainly just are offering it as an auxiliary product to offer an all-in-one, one-stop shop for our clients. If they offer something like this, that's not as bad as actually pushing it onto clients because it might give us a higher commission. SoFi goes on to say, "In the most recent quarter, we reported $3.85 million of brokerage fees, of which digital asset revenue is a component. This also includes our share lending and payment for order arrangements that we have with our SoFi Invest product, as well as exchange conversion services." So first off, out of our $419 million of revenue that we brought in our last quarter, this makes up less than 1% of all brokerage fees, and yet even cryptocurrencies makes up a fraction of that amount. So this is by far not a big product for us at all, probably at most 0.5% of our entire business. SoFi finishes it off by saying, "We look forward to sharing the requested information with senators in a timely fashion." They seem to be very comfortable in being able to show off what they need to show off. I think, they did do a different offering whenever it came, in March. It was a little bit of a sly in the face of regulators. But if we do have constant and constructive dialogue with them, I'm sure they probably have asked us about it and we've given them a clear and concise answer to why, maybe we're offering this and it's not a complete new service or offering, definitely not a new cryptocurrency itself. But what do you guys think? Out of the 3 allegations that we're getting pinned up against for offering a new product or service, having 30 or some odd unregulated tokens that could be dangerous to clients, or that our balance sheet does not have the regulated amount of money that we need as collateral for $135 million worth of crypto that's on our exchange, Which one do you actually believe? If not any or all of them, please let me know in the comments down below. If you guys are already down there, appreciate a like and subscribe down below if you want to see more financial content just like this.